FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video. As you can see, we are looking at the dollar index, and I think it's a good point in time to give you guys an update as to what I feel, what I would be looking for essentially for the dollar index in the upcoming, let's say, month or so. Obviously, we've been talking about the run that the dollar has been going through ever since the Fed stopped printing money and started raising interest rates. Now, as we come to a point now where essentially what's happening is the Fed keeps raising interest rates, right? And then now we're starting to see the effect of the actual interest rates going up. And that's basically inflation starting to come down. Now, I think that when inflation was at 9.6% back in June, I believe that that is the actual peak of the inflation. I don't think it'll go any higher than that. And so I think the important thing that you guys have to understand is that everything that the Fed has done so far as raising interest rates is really delayed, right? We're not going to see the effects of that until many months later. And so now we're literally starting to see the effects of the actual interest rates being raised over and over and over every single month. So we've gone from 9.6 to like now we're down to 7.7 to the latest figures that we've gotten. So far, basically every time that the Fed has increased the interest rates, it's made the actual dollar strengthen, right? And that's why we see the big run up that we have here. But now as we start to see every single CPI, every new single CPI, if that CPI produces a lower inflation rate, okay, we're going to see that dollar strength start to diminish. Okay. So now I think what's really going to be very important for us to watch is how many interest rate hikes are we going to have still left before the Fed starts to either pivot or ease, basically, stop the interest rates hikes or lower it from the 75 basis points that it's been doing now for the last 3 times. So the next meeting is in December, okay, for the Fed. And we know that they're going to raise interest rates again. That's a given. All right, that's totally a given. We know that's going to happen. The question becomes, how much are they going to raise it by? Because the market right now, okay, is expecting a 50-point basis raise next month. That's what the market is expecting. Okay. Now, what do you think happens if we get a 50-point, increase in interest rates instead of anything else? So if the market is expecting 50 and we get 50, that's good for the actual markets, but bad for the actual dollar strength. So the dollar strength will continue to lower. Okay. Now, if the market is expecting 50 and the Fed does another 75-point basis, okay, the markets are going to look at that as bad, but that's also going to continue to increase the strength of the dollar. All right. So hopefully that makes sense to everybody so you can understand why it's important how the market reacts to certain things that happen. Right. So we saw the CPI numbers from yesterday. Right. 7.7% is the inflation rate right now. It came down. It's been coming down from 7.9 now 7.7. So it's starting to come down, which is a great thing, right? We want the inflation to come down. Ultimately, the Fed wants that to be at 2%. It's going to be a while before we get there, right? But because it's coming down, that's what's making this happen right here that you see where the dollar is losing strength. Okay. So this bar right here is off just from literally CPI. That's it. All right. Now, what we expect, or what I would expect, is because we're still increasing, okay, the interest rates by the Fed, is we should still continue to see a dollar strength. Okay, when this is over, when the Fed decides to either pivot or start to pause the actual interest rate hikes, that's when the market is going to blow up. And I mean, in a good way for us, to where essentially you're going to be looking at like NAS 100 or US 30. You're going to see those skyrocket. Okay, you're going to see those completely skyrocket up. Okay, you're going to see stuff like this. This last run from the pandemic, you're going to see something like that. Okay, but I don't believe that's going to happen yet because we're not done raising interest rates. Okay, so what do I expect looking forward to the next few months or whatnots? If we look at the smaller time frame, like the 2 hour time frame, you can see what's happening. We just had a reset happen because of CPI, right? So it's only going to drive prices down for another cycle. Now, luckily, that cycle could end down here at 105. And really, it could end a lot sooner because that CPI news made a huge move of about 400 or so pips. Okay, that's almost the same as the last cycle. That's actually more than the last cycle, which was 360 and some change. So if we look at what are we averaging for ADRs right now on this, and you can see that we're averaging about 100 and 130 or so, and now we're moving into 140. So around 135 is what we're averaging on the ADR for the dollar index. So for averaging 135, a full cycle is about 405, 405 pips, and obviously we're already we're pretty close to that right now at 390. Okay, so what I'm looking for essentially is to see whether or not we can get into a full cycle by going all the way down to 105. Okay. If getting down to 105 is about 624 pips and we're averaging, let's say, 135 or so, it's going to be right there at about 4.5 times ADR. So it is possible that we can get down to this bottom here on one cycle, and it would be about 4.5 times ADR. Okay. Now, very important though that we see that there are going to be orders here that are going to be grabbed by market makers, obviously, and so there's going to be orders down here as well that market makers do want to grab as well. So honestly, it just depends on how many orders are needed by market makers before another move up is going to happen. Okay, so for right now, if you're trading, if you trade NAS 100, if you trade US 30, you're looking for dollar weakness. Okay, because that's what the dollar index tells us right now. So that means basically you're looking to buy NAS 100, you're looking to buy US 30. Now, keep in mind that that dollar index right now is currently already pretty close to 3 times ADR. So at any point, it could create a peak formation low and then go ahead and start to look, for more dollar strength. Obviously, these things can change. And so as new data comes, then obviously we'll make changes as appropriately that we need to do. But for right now, we're looking for dollar weakness. So basically, that would mean that the pairs right now that trade the dollar would obviously be going in a certain direction. So anything that starts with USD, so USD JPY, USD CAD, USD Swiss, those pairs would actually be going down, and then anything that ends in USD will be going up. So that's Euro USD, Pound USD, AUD USD, NZD USD, those particular pairs. All right. So hopefully this gives you an outlook as to what I'm looking for when it comes to the dollar index. So I hope you enjoyed this particular video, guys. If you like this type of content, please give me a like on the video, share the content, and subscribe to the channel, guys. And we will see you in the next video. Guys, if you need any more help or you like the content that we provide on this channel, come on over to the FXN Masterclass. It's available right now. What you get essentially is a lifetime membership, a full mentoring course, an advanced course. You get the Blue Summit videos, weekly Q&A sessions every Sunday, group session archives, which that by alone has about 100 hours of content, weekly analysis videos, midweek analysis videos, MT4 and MT5 indicators, a customized trading journal so you could actually journal your trades every day, and then a backtesting journal that you can use to backtest and collect all of your data. Not to mention a mentoring private chat, guys. So all the information is in the link in the description if you want to join now. We look forward to seeing you there, guys, and take care of yourselves.